Ty Webb, Real Estate Crab here in Annapolis, Maryland. Today I wanted to change pace a little bit. We've been talking about a lot of controversial topics recently, so I thought we'd change pace by discussing something that's not controversial at all. And that topic is the elimination of the tax deduction for mortgage interest in the United States. Just kidding. I do realize that's the political third rail in this country. But there is some discussion going on out there, and I came across an article yesterday that I just wanted to share with you. The article was in the New York Times, and it was written by a lady by the name of Agnes Crane. And Miss Crane pointed out a couple of things that caused me to think a little bit. I thought I'd share them with you and get your thoughts. She points out, number one, that the tax code for mortgage interest deduction, the way it's written, really encourages big mortgages. You got to, understand that, I guess. And in fact, she said, you can really look at it as a government incentive for us to extend our housing budgets, maybe even beyond where they ought to be. And it has a little discussion in there about during this real estate bubble that we experienced in recent years, how it was probably helped along by this interest deduction. The housing prices went up, the mortgages went up, the people became comfortable by rationalizing about the deduction of the interest as saving them income and started putting together all the math. I think she has something there, and it's a legitimate suggestion. The primary opposition, she points out, to eliminating the deduction comes from those who say, look, if you do that, it's going to have a crushing effect, a downward effect on the cost of housing, the price of housing in the United States. And a lot of wealth is going to be lost. And of course, in the present atmosphere, a lot of wealth has been lost already. But she goes on to point out, look, this deduction really benefits those who don't need it the most. It benefits the most those who don't need it. The higher income people. The lower income people, sometimes that deduction might not even be big enough to offset what they can now get as a standard deduction, so they may get no benefit from it at all. So a point well taken. As to the impact of eliminating it, she gave a pretty good example, a real life example. I didn't realize this, but Great Britain eliminated the mortgage interest deduction. And how did they do it? They did it, they phased it in over 12 years. And the end of the phase-in was the year 2000. Since the year 2000 in Great Britain, there has been no deduction of mortgage interest. I had no idea. So, if we look from the year 2000 to the present, what's happened to housing prices? Interesting statistics, she writes. From 2000, the year 2000 to the year 2007, housing prices went up, appreciated 145% in Great Britain. Didn't have a crushing effect on housing prices. So anyway, I think it's interesting to keep this in mind. I doubt seriously whether any politician has the intestinal fortitude to put that on the table. But as we take serious efforts to strengthen a very weak part of our country right now, and that's the housing market, and as we deal with government deficits and that type of thing, you may see this come up. I just wanted to pass that along to you, maybe stimulate some thinking. If you'd like to discuss it more or give me your thoughts, I'd love to have them. Just shoot me an email, tywebb@recrab.com. And in the meantime, be sure to make it a great day.